Good morning, everybody. Happy Wednesday. We are back for another fun day of adventures in the stock market. Joel is here. Dennis is here. We'll be joined by Joe Saluzzi from Themis Trading in about a half hour or so to talk about what's on his mind. We got a lot to get to today. The theme of the day, actually, the theme of the
You
year
probably
really
heard before
is
that option.
value growth. Right. And yesterday the spread got even wider. So we'll talk about that. We'll talk about some things to expect at CES, talk about Beyond Meat moving today. A couple headlines from the Benzinga news desk that we broke that are moving stocks today. So go ahead, hit that like button, show us some love. And we got some feedback that people missed the old intro. So for those people that missed the old intro, here you go. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Oh, yeah. Good morning, Joel. How are we doing this morning?
Doing good, Spencer. How are you on this hump day, this Wednesday? Triple D there. You're looking good. I like that shirt. I think I've seen that before. S&P futures traded down 4.25 handles. Talk with Dennis a second about the close, the last 9 minutes. Pretty wicked yesterday. Crude up 25 cents, 77.24. Gold in the green by $4 at 18.60. Silver, that's flat, 2307. Bitcoin, come on, Bitcoin, get away from this 45.5 or else we're in big time trouble. Down $40 at 46,265. Ethereum down 28.50 at 36.96. So Triple D, we were on the verge of busting, closing over 4,800 with 9 minutes to go into session. And then whoosh, rug pull. Now, my theory, and you get the imbalances before I did, I saw some buying balances. So aggressive traders, this is a theory, got ahead of those buying balances. And then you know what? The big boys said, I'm selling. And then they got caught and they had to sell into a falling market as opposed to unloading into the closing print. Am I close or not?
Honestly, Joel, it wasn't even that much. Like, I know you see a sell-off of 12 handles and you think, whoa, but we were choppy all day. Maybe not on the SPY, but on individual stocks, the SPY was not even on my screen. The SPY was so insignificant the entire day. It was all about rotation. I think, bring up a chart of deer.
Joel,
Bring up the chart of deer.
Oh, I didn't share. It's
Yeah.
fun to share.
DE up $20 yesterday on nothing, just because it's a low PE stock. It was complete separation. I have never in 22 years seen that much rotation, that violent of rotation in my life. There was literally value stocks rallying 10% and growth stocks selling off 10%. Like, just bring up Berkshire Hathaway versus Cathie Wood. Burke, I think yesterday was up. What was Burke up yesterday?
It
2
was,
to
I
3%?
think, yeah,
something like that.
And
yeah.
Cathie was down like 6%. There was like a 9% blowout yesterday, just versus Cathie in one day. Cathie versus Warren. That was crazy movement. I mean, you had growth stocks getting assassinated, and that money was running right into value. The banks could not stop going. That bank rip roaring 2-day rally is nothing short of incredible. I mean, JP Morgan 158 to 168 in 2 days. I mean, this market, it's interesting. We'll say that, but the rotation was unbelievable.
So is it just like, is this like the pop, like the bubble pop, and just like everyone's getting too extended, or is this just a continuation and more of the same to come? I mean, we're not really seeing any weakness. I don't know. Berkshire Hathaway's trading up another 88 cents today. J.P. Morgan, 10 dollar run in 2 days at J.P. Morgan. Bank of America, same kind of thing. Intel's, I mean, Will it ever stop is the question.
Yeah, it's gonna turn and it's gonna change, and then there's gonna be different days of rotation. I mean, now if you're coming in growth, like, or if you're coming in value, you're chasing now. So now what you want, I even had a couple of people reaching out. What do you think of the banks now? What do you think of the banks? Because they're
Huh.
obviously ripping higher, so people are excited. I mean, now can I come in and buy them now? I mean, I want to pull back, but yeah, I mean, we've been talking about the banks being a trade for 2022 for a while, for the simple reason that interest rates are going up. And the pure play for interest rate hikes, at least in this market when interest rates are so low, is to be long the banks. So it's a textbook play that the banks eventually were going to catch a bid, and they did. I've talked about Citigroup for, I don't know, I've talked about Citigroup, and obviously it was too early, 61, 60, 59, 58. I talked multiple times on the show late mid-December. So now 64, so it's come around. I mean, there's just so they're they're value, and they also got the interest rate, catalyst here
The
too.
dividend.
So, and the dividends are okay. I mean, I think on pullbacks, you got to be long the banks. I think it's all about rotation. It's not going to just be straight down, straight up. I don't expect the banks just continue. I think you're going to have some whipsaw action. You're going to have some shakeouts. Growth isn't just going to tank and go, just go away here. But I think it's safe to say that when we look, at the growth names, we are now replicating what happened in the year 2000. We topped out, so March 2000, we topped out in all the NASDAQ and all those growthy
I was
names.
gonna say something about that, but
And we topped out in February of 2021, and we've followed a very similar path. I actually want to, I've looked at this, and we had some rallies in there, but we followed a similar path in the growth names where it was the death by 1,000 cuts. A year later, we were down significantly in all those growth names. 2 years later, a lot of those growth names were down 90% from the highs. I think you're going to see a similar story in a lot of the growth names. I think you're going to see some stocks. I know, obviously PTON's already down 70 or 80% from the highs, but I think you're going to see a lot of the growth names, a lot of these smaller names that probably don't even survive. So, some of them are, but I mean, you have 100 EV plays. We've said that all along. There's going to be 100 EV plays. There's going to be 25 charging, stocks, out there in the long run. So there's going to be separation. There'll be some winners, some losers. I think, this market's trying to rebalance itself because it's been so focused on growth for so long. It's realized in the last few months it's not working. And now in 2022, it's just getting assassinated. So, I mean, I think it's all about balance. And I think you've got to be having some balance to your longer term portfolios. You can't be all growth. You can't be all value. You need balance. If you're all growth, you're getting hammered. If you're all value, you're laughing right now. But that'll change again too. So use, those pullbacks to rebalance yourself. And, it's not, you can have some growth names, pick which ones you think are going to be winners. But when you're paying 30, 40, 50 times sales for something, it ends up being a Zoom. And, at a certain point, Zoom is making money. At a certain point, it becomes a value stock. But I don't know if we're at that point yet on a stock like that.
And they give you these moves like, it makes a new low of the move and then pops like that. I mean, so you're thinking, oh, I got stopped out. And then it rallies, closes, near the upper portion of the session. And then you come in, it's down 235. A new low of the move and then pops. So now you got, if you were leading on the low of the move, you got stopped out yesterday. Yeah, if you want to try it again, 172.10. What's the low? Do you have the PE still on
yeah,
Zoom?
yeah, sure.
I
Yeah,
bet you it's still astronomical, right?
forward PE. Oh, it's actually going to come down, right? Obviously, so 39, which is not nosebleed, but still high.
39?
It's
It,
reasonable.
it
But
is,
you know what the problem
but
is?
it's come down because the price has come down.
Yeah, but you know what else the problem is? Do you think they're going to continue to grow? Like I wouldn't be surprised if the earnings actually start contracting.
Oh, what if they miss? Oh,
Well, like, I just think there's so much competition. They're a one-trick pony. We need another trick. Zoom needs to come out and do something else. They can't just because we've moved away from it. I mean, we've talked about this for a long time. We talked about this one with $500. Why it didn't make sense. I still don't know if it makes sense even at a P of 39. You can say, well, it's growing like crazy. Yeah, but you're looking at past. Is it going to continue to grow at those rates? I think the market's saying no. I'm saying no. I wouldn't be surprised if we've already had peak earnings on. Well, maybe it's going to grow a bit, but it's tough. There's just so much competition there, especially if we're going to a full reopening. I just can't see I just don't see the growth just for that product. So they need another product. And,
But
and until they get another product, I think it's a no touch for me. They
going
get a
back to
cool
what you said
product,
before,
something else,
well,
maybe you get interested.
so as it pertains to Zoom specifically, the first thing I thought of when like the metaverse became like a hot topic a few months ago was, whoa, like wouldn't this be bad for Zoom? If we're all going to meet in the metaverse, then Zoom would have to develop their own metaverse solution. But going back to the broader point about value and growth, and Dennis's point about this being maybe the opposite of last year, whereas like so Zoom, right? In Zoom's case, Zoom topped out actually in October of 2020, so it actually topped out before a lot of the other growth stocks did. But uh, just like these growth names all kind of kept going up and up and up until they didn't anymore, um, until there was just capitulation on the upside. Is this the opposite? Is this the same thing just on the downside? Um,
I
and
don't think so because they're not cheap enough yet. I mean, we've went from where value was all story. A year ago, as valuation doesn't matter, it was all story, and that was the market we're in. We're now in a value market where people are looking and they're saying, okay, well, what's the P on that thing? And you see a nosebleed P. And Zoom is it's not crazy at 39 times now. It's
yeah.
come down a long ways. But at the same time, if the earnings aren't going to grow at the rate they were, it's still almost 60% higher P than the S&P. So, and you've got the problem that there's a lot of competition coming in that space. So I don't know if it's the best candidate to try and be called the bottom. There's a lot of growth names that interest me, but it's a tough right now. You want to be like, at a certain point in time they'll get cheap enough, but there's just so many that are still like, okay, well, yeah, I want to jump into that. And then you look at the financials, and you're like, you look at the cash flows, and you look at start putting your CFA hat on. You're like, well, none of these stocks still make any sense at these prices. And that's what we saw in 2001 and 2002. We saw those multiples come down, 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 and eventually 2 years later the Nasdaq bottom being down 81% on the Nasdaq. And the difference is the Nasdaq isn't all these growthy names anymore. We know it's those top 5 names, which were never crazy overvalued anyways. So that's why the Nasdaq, you're like, wow, there's no correction. The QQQs are holding up. But there's so much Google and Amazon and Apple. I mean, Amazon you can say is a higher PE, but we know they can have more earnings if they want to. So it's
Who
all
can
about
we
growth.
bring on? There's got to be someone a
Yeah.
lot smarter than us that like tracked, how the PEs came down in these stocks back in 99, 2000, right? Because Zoom, what was it over? I don't even,
It's
I
like
can't
40
remember
times
how.
sales. So yeah, PE like 130 or 140.
Yeah,
It's come down a
but
lot.
I wondered where there's a point, where like where these stocks came down to as far as on a PE basis. We
Hmm.
know we don't know where they came down in price, but just to see a progression. Maybe if you see that, get a chart of the PE and it's just it went
When's
straight
the
up and
value come in?
straight down, right?
Yeah.
And then it maybe stabilize. Maybe when it can stabilize at like 35 or something like that. But who do we got? Who do we have that would be able
Let,
to?
let me think. Let me think.
We got
Although
some.
We'll leave that with Spencer. We're not going to
Okay,
figure that
Spencer.
out live on the show.
potentially our Friday guest could help us out with that, Trevor Neal. But
Okay,
yeah.
Let's jump
Uh,
into some individual stories.
let's
And the
go.
big
well,
story of the day.
okay, but before we do that, the last thing I want to add, and Easy Mike pointed this out in the chat, is that the timing, as far as the value stocks go, and the banks, the value is the timing is interesting here, right? Because the banks report earnings next week, right?
Yeah.
So we're like T minus like 6 trading days from bank earnings reports.
Yeah.
So to have a huge rally into, we see this a lot, but it's happening into earnings season here. So the timing of this rally in banks is interesting. So it's good point. Earnings next week. Just don't forget that, everyone. But as far as individual news here, there's a few things. Beyond Meat is probably going to be your biggest mover or your biggest headline of the morning here. What is the stock up now? I haven't even checked.
We got breaking news here too. Just stop for a second.
What do you got?
Payroll,
What do you got?
ADP.
Okay, yep, I told you about this.
AD, yeah, you told me about it, but come on now.
I just saw the S&P start moving, so that's why I was like, "Oh, there's
Oh,
news."
he's getting Joelitis on the S&P.
Yeah, it's getting Zolitis. Actually, though, that's interesting because ADP came in way higher.
Yeah, so I'm a little bit disappointed in you, and the only reason is because okay, that wasn't that big of a move, right? from it went from 98 to 85, but look what it did in the after hours or in the well, I guess we consider it in the pre-market. I mean, it went down to 66.50. It almost
What are you
went down to
talking about?
yesterday's low. The follow through, the
On
follow
what?
through in the
We aren't
S&Ps.
talking the S&P anymore. We forbid it from the show. It's too boring. I just said it's moving because you see the
That
All
overall
right, Beyond
market.
Meat. Back to Beyond
well,
Meat.
hold on though. That ADP number was
They love that ADP
was
number.
surprising to say the least. ADP, it was. I don't know if I remember seeing a beat that big. The ADP print for December. This is private sector jobs, 807,000 versus an estimate of 375. That's a key. I don't know if I've seen a beat that big before. Now the ADP number of the three main payroll data points, you got ADP, you've got jobless claims, and you've got the actual jobs number. The ADP is the one that I think has the highest beta. That's the one that, or at least has the highest variance. But still, though, 807,000 versus a 300,000 estimate. I mean, or 375 is pretty big beat. So anyway, we'll see what that tells us about. I don't know what that says about Friday's number, but the jobs number this Friday will be the more important figure. But anyway, ADP out this morning, big beat. Beyond Meat is your big stock news story of the morning, or I guess it came out yesterday. But they, after testing their products in KFC locations, for a couple years now, they announced yesterday a nationwide rollout of Beyond Meat plant-based chicken in KFC, and it's happening.
This is their big contract. The fake chicken got the chicken contract. KFC's huge for them. So this is huge news for Beyond Meat. I think if we were in normal, like we were in the markets we were a year ago, Joel, like take us back and they released this information in January of 2021. The stock could be up 30% on this headline. But we're in this we hate growth stocks and they don't make money phase, so it's up 9. But I'm not coming in to buy it. I'm not coming to short it. The stock is absolutely hated. The stock is absolutely overvalued. It's fantastic news for the company, though. I mean, this is a big contract for them. You think they tried Tim Hortons, they tried McDonald's. Now they got KFC. They got the chicken. That's what they wanted, the chicken contract.
People go to KFC for greasy chicken. They don't go there for plant-based chicken. But
They don't want to eat that plant. Maybe they will, though. Maybe this is actually going to make me feel okay eating KFC because I tell you, I go to KFC, 10 minutes later, I got to visit the bathroom. So maybe if I switching over to the fake chicken, maybe that's going to be okay. I love KFC. I can only go there like once a year, though, because I get sick from it right away. And it's cheap, too. I mean, I don't know about their cost. That's the one problem is Beyond Meat. That was the problem when I went to McDonald's. You get the Beyond or A&W, you go to the Beyond Meat burger, and it's like twice as much as a normal burger.
Mm-hmm.
KFC bucket of chicken you still get for like $20, $25. I don't know. Can you do a bucket of Beyond Meat? It ain't going to be $25.
well, you just got to be careful when you're holding the real chicken that when you're holding the bucket, if the grease doesn't go through the bucket and then you drop the bucket in the parking lot, from all the grease soaking through.
It's a
Um,
greasy.
I don't know.
Did you
You
guys?
know
Tastes
what I'll
great, though.
say? You know what I'll say about Beyond Meat? We don't buy it anymore. I mean, I told Lisa, I'm like, whatever. I'll eat tofu before I'll eat a Beyond Meat. And the Beyond Meat sausages or even hot dogs are even worse. But here's the deal: if you're trading this, someone's out there at 68. They either they're stuck or they bought a boatload yesterday and they're just trying to get out between 68 and 68 and a quarter. So if the meme crowd, if the short crowd just says this is the greatest thing ever for Beyond Meat, they're going to barrel through 68 and a quarter, and then your next daily high, I mean, whatever. Maybe look at 70, but first things first, let's just get bid, take out 68, get bid over 68, and I think it will run. If not, it will, it might fade, but I'm not sure in it either, and I'm not
I'm
buying it
not
up.
trading this because
Yep.
one, this is a great headline for the company, but
It
two, this
is.
is a hated stock. So if I was long, I would probably sell into it. I think you got great resistance up at 70. I can't bring a short on it. One, it's way oversold. Two, it's a really good headline. And
It is
three,
a good
liquidity is going to be less than something like this, so it could just be wild. I mean, you could short at 60, 70, 72 in your face, and later in the afternoon, it could be 67.
65.
You get
Yeah.
shaken out on it. It's still wild on it. It's going to be wild on it. It's a good headline for the company, but the valuation's nosebleed. Long term, I still think Beyond Meat's a lot lower, but I think short term, it's getting a lift from this. I don't know how far this is going to take it.
Did you guys see the viral video? I think it was yesterday. A guy got home and walked into his kitchen and saw a bear eating his bucket of KFC chicken.
Even the bears love it.
Look,
it tastes awesome.
Look. The bear is.
It went through everything, and it went for the KFC.
The bear is neck deep in a bucket of KFC chicken.
Yeah.
Wow, what a messy kitchen.
Wouldn't that would be that'd be I'd be scared actually. That would not be good. It's one thing, you get a mouse in your house or something. You got a bear sitting there eating a bucket of chicken. I'd leave the house. This is Goldilocks.
That's bearish.
Yeah, that's bearish for sure. Bearish for the house.
How is what's the symbol for the Pizza Hut, the KFC?
Yum.
What is that?
Yeah, it's Yum.
Yeah, how's Yum doing? Did that get Chinaed?
No, well, there's Yum C, remember? So they separate all their China
Yum
operations.
C.
So Yum C got Chinaed. Yum's not. It doesn't have any China anymore. So it's been holding
good. That was a good move, huh? Look
Yum's
at that.
been good just because it's all fast food. It's quick service. It works in the pandemic, and obviously, and it works not in the pandemic as well. I mean, it's like McDonald's. Both those stocks been straight up for 2 years. A lot of money hiding there. Valuation's an issue with all these things now too. I mean, some of the value stocks aren't that much value anymore in them. So
survey in the chat. Have you eaten KFC in the last 6 months? We have 49% no, 24% yes, 21% hell no, and 4% ask the bathroom.
I voted for ask the bathroom.
I didn't even get a chance to vote. I didn't even. Anyway, okay. So
I did the chicken sandwich survey, Popeyes. That kind of made me sick, and then I did the KFC, and it kind of made me sicker. So I think I'll stick to
that's a win.
The non-fried foods there. Okay, let's go. What else? We got stocks. Let's do some stocks.
Always stocks.
So there are other movers in the morning. Wejo is
Wejo,
a headline that we broke. The Benzinga News Desk broke this yesterday, right after the close. Wejo announced a partnership with Microsoft. I think they're going to talk more about this at CEX. Actually, I know where they would talk more about this on Benzinga Live today.
Oh, nice.
At like 12, what time? 12:45. We're going to have the CEO of Wejo and somebody from Microsoft on the show to talk about what this deal actually means. Regardless, Wejo's popped up to 965 yesterday after hours.
Faded.
And they're fading it this morning. Yeah.
Here's the problem. And I've been following this stock, and I regretted not buying it.
Days, it's only been out there like
no. We had the
guy
that put the spec together on the show, Jeff Warshaw.
Oh, okay.
Remember?
Yeah.
And here's the problem: they're going up against Google, right? And as far as mapping and sensing, and Google's pretty tough. But here's the question: can they just get if they could get a smidgen of the market share, right, away from Google, then this could be like a super valuable company. Once again, you got to make money. So I was looking at it, combing the ditches. I don't like that it's given back to pop, but this is on my radar. If I owned it into this pop, I would not be selling it, and I am looking to buy it. Full
I know nothing about this company. I'm not even going to comment on this company. It's too small for me. I don't.
Okay.
I'll tell you what they do if you forget. They're the company that is like connected car data. It's like the Google for the car, kind of. I'm not sure.
In reference to what Dennis said about Beyond Meat, if this was SPAC mania, man, this thing would be at like 40 bucks.
If we were in January, we'd be talking about a dozen stocks are up 30% today, January of last year. This is January 2022, though. This is the value market. I like this market better.
You like this one better. Okay.
Yeah. I'm a value guy, so I kind of like this market better.
Every time value's been in favor, it lasts for like a week, maybe two.
Yeah, but this is like 9 months now. This is not, something that just happened.
Right.
Value's been in favor for a long time here, and we just haven't we've talked about it, and it's just been the slow, steady trickle from growth to value to growth to value. And then you turn around and you look and you're like, holy mackerel, Warren had a really good year. Yeah, he did. Holy mackerel, Kathy had a really bad year. Yeah, she did.
Yeah,
it all turned 11 months ago. It turned 11 months ago. Yeah. Berkshire Hathaway broke out from 240 back in February, has never looked back. It's up like 70 points on 240, 30%. And Kathy broke down from her high at 151, and she's never looked back either. It's straight down. we have been trickling into value for 11 months. So you can say, oh yeah, it's only a week or two, or it's only a couple days in 2022, but this trade's been going on for a long time. It almost feels like it could be like the capitulation to a certain extent here now, where it's starting to get just silly.
Yeah,
That's
that's
You're
it.
up 20
That would
bucks
be.
in a
That's what I
day is
said
silly.
before, but you said you didn't want to call the bottom in anything. But
I know, yeah.
No, you
I don't want to call it.
trying to call the
I
top.
tried to call the bottom and all the
I'm trying to
khaki
call the
stocks. I
bottom.
thought I
I'm
was
trying to
going
call
to
the
bottom
bottom.
You got
in the
stopped
first week
out.
of January. How'd that work for me?
I
I
like
got
you
stopped
stuck
out on
with
every
it though,
single one.
Dennis. You
Every
stuck with
single
it.
one.
You stuck with it. You had an idea. You had a plan. You stuck with it.
I stopped out
And
on all of them.
Dennis, me too. Yesterday in
I got
Palantir.
stopped out on. We both got stopped out on Palantir, which probably is going to be the low.
that's what
I
Spencer
sold
It's
said.
gonna be the
space.
low.
I sold everything. I had the ones I had SE, which I actually got out on the pop on that one. Thank goodness. Thank you, Bank America. So I got lucky in that one. But I had about 7 or 8. I had never put on a full like go all in because they never really gave me the signal to do that. But I was ready. And then it just didn't work out. I didn't like the first day of trading where they kind of were just not going. They didn't. And then yesterday, obviously, it sold off substantially. So yeah, so I had like 5 or 6 growthy names I had put on. Like I said, a half dozen. SE was one of them. I sold that. I
Ooh,
had
that was a
Space,
wicked
SPC.
day
I
yesterday.
lost on that one. I had Palantir. I lost on that one. I don't remember. There's a few other ones too, but I got them all.
You're gonna have to do a rescue mission in that swing account.
There's no
there,
rescue
Dennis.
missions here. You take your losses and you move on. You don't try to rescue a loser. You take your
Yeah,
losses. And you
I
move
didn't
on.
realize that. I didn't realize that space was one of those that you were.
Well, I don't like talking which ones I have
Yeah,
either.
oh,
So until after the fact, yeah, because I
wow.
had 4 or 5 lows in the same area. You can see what I was looking at.
Yeah,
I was like, oh, I got a little double bottom. I actually was up in it briefly. You know, when we had that big rally like Thursday last week, and then comes the first day of January, it's like it's not going, and then it's like, oh, they're selling them all, and then, you know what? It's still holding the lows, so it actually still. I probably shouldn't have stopped myself out on this one. You
I know.
actually have all those lows there, but
Yeah,
just with
that's
the
still there.
ugliness of ARKK yesterday, I was like, I don't want to own any growthy thing. So
Yeah,
all interesting.
they are. Yeah, that's the caveat. Like they are all still holding their lows. So
Yeah, so we probably shouldn't have stopped out on any of them. You know what's going to happen, Spencer? We're going to be complaining here in a week as they all take off, and Kathy Wood rips up through $100, and we're like, oh my gosh, why did we sell? Never take a loss. It always comes back.
Palantir's going like 21 now, and I'm gonna be anyway. Whatever. Real quick, we're gonna have Joe Saluzzi on in a few minutes, and
Joe's coming.
Awesome. We'll get Joe's thoughts on
That
everything.
made my whole
here.
day.
I wanted to go back up in the topics for a second because we skipped over CES, and that starts, I believe, today. So we're gonna get a lot of like not random, but a lot of like cool techie headlines out of companies like Sony. They unveiled some EV prototype. We're gonna get John Deere, which you mentioned, Dennis. John Deere. You were saying, oh, it's up because it's Deere and its value. To that, I say, what about John Deere's first autonomous tractor, which will
When
be
did that
available
come out?
yesterday?
Oh, so that was the driver?
Autonomous tractor.
No, it has no driver,
I
Dennis.
know.
It's
It's true. Yes, I saw it as soon as it came out of my mouth. I was like, somebody's going to hit that softball up the middle.
Yeah. Mobileye or Intel or whatever. Mobileye had a thing, a self-driving car thing. So there's gonna be a lot of like tech headlines coming in the next 3 or 4 days. So be mindful of that. Self-driving cars is going to be a big theme. The metaverse is going to be a big theme. Keep an eye on Meta, which is your metaverse ETF. And just yeah.
I'm still bearish the metaverse. I'm the only person maybe, but actually this
We're
probably
not going to let you in.
Yeah, I'm sure if I could short the person that bought $250 million worth of metaverse property, I just think, okay, it's advertising space, I guess, but I think we're way too early on this metaverse thing. I don't think everybody's going and buying their Oculus and putting this on and wasting their time.
That looks so
socializing in the
heavy.
metaverse.
But you know what? I'll tell you, Todd Gordon, we did that thing with Todd Gordon, and he had him on his deck. It was great. We had Todd Gordon and Gene Munster on a couple of weeks ago, and Todd had his Oculus goggles, and he talked about he was on vacation in Florida, and he had a trade set up, and to his Oculus goggles, he was able to sign into his computers at home and do like a video or be on CNBC, and
That's pretty cool.
he could move his monitors around and everything. I was gonna call
He
him
was
up and ask
reaching
him
out
how to
through the
do it.
metaverse and actually moving the
Yeah,
monitors.
that's
I
cool.
would
But
just
That
add,
stuff's cool.
I will add that the Oculus apparently did very, very well
Christmas.
this
Yeah, I
holiday
know.
season. Yeah,
Yep,
I
he
saw,
did.
I saw a thing from I forget who the firm was, but like daily active users were up like 90% year over year. Christmas of 21 compared to Christmas 20. It was like the Oculus app was like the hottest app in the App Store last week, 2 weeks ago, whatever. So apparently it had a very good holiday season. A lot of people buying the Oculus headset.
Yeah, it
Yeah.
reminds me of Google Glass.
No, it's way better than that.
I think we're just too early. I think, paying nosebleed valuations for all these metaverse companies. Maybe you buy Facebook. Maybe that's the simplest way to play it. But
They
again,
did. They
to
did buy
Gene
Facebook.
Munster's point, and Gene is awesome. We listen to Gene, obviously friend of the show. He says Apple and Facebook are your pure plays, or not pure plays, but big plays on the metaverse. So I think you're right. I think Microsoft, I think Apple, I think it's going to be, these smaller companies. I think, okay, yeah, Unity, but you're playing nosebleed valuations. Then you look, okay, well, I paid 22, 23 times earnings for a Google or a Facebook, and guaranteed they're going to be big players if the metaverse materializes. And if they don't, they got all their other cash cows too. So maybe it's just another excuse to own the mega caps because they just seem to win in everything. So I think at the end of the day, when we look at the metaverse, the big players are going to be Apple, Facebook, Google, Microsoft. They're all going to be big players in the metaverse too. So I'm long all those stocks. So I guess I am long the metaverse
The
to a
big
certain
get
extent.
bigger. It applies to more than just the S&P. It applies to everything. The big get bigger.
Well, that's the way it is. I mean,
The way
that's
it is.
what they, they're those are the smartest people. Amazon's obviously gotten to every single business, same way. I mean, those are the smartest companies, smartest people. It's why they have the highest market caps. Why they're worth why Apple's worth $3 trillion.
Mm-hmm.
So I just think gambling on some small little metaverse play may not even be the easiest. It might just be buy Facebook. And you're not going to make, I know, people want to make 200, 300% on their money. They got really spoiled in 2020 and the first week or first month of 2021. But I think people are starting to realize, hey, that the stock market isn't as easy as we thought. The people who thought I'm a genius at this, I think, a lot of those people got caught up in the growth names and maybe and there's some really good traders out there and a lot of them are in this chat. So I mean, we've had some traders, and a Christian Fromhertz, think about him. He's always playing the momentum. I've given Christian another shout out there because he beat the S&P, heavily last year again, which is tough to do. I have no idea what my returns, are on my day trading portfolio because I'm using prop money, so it's really hard to figure out. I think I do really well on my day trading. The swing trading, I think I do okay. I go with some trends. Long-term investing, I just kind of go with the flow. I don't know if I'm a great long-term investor, so I don't even know. Like my percentage returns would definitely be less usually on both sides than the S&P because I have a really conservative portfolio. So because I'm aggressive enough in my trading that I kind of invest conservatively. I never invest in something with a P of like 30, 40, 50. I'm a value guy. I'm a Warren Buffett approach in my investing.
On that note, I mean, Mitch pointed this out yesterday to us. I mean, Warren Buffett's, Apple has grown to be a sizable piece of Berkshire Hathaway, and that's no
He'll
fault of.
trim it.
Is
I
it really
guarantee.
40%? That's what Mitch was saying in the pre-market show, that Apple has grown into 40% of Berkshire's market cap. Does anybody have like
Yeah, maybe.
confirmation on
Here,
that? I've not
take
looked
a
in
look.
Berkshire under the hood. I know like the different companies, but I didn't look at the
Here,
percentages.
let's take a look. Yeah, well, as of the last filing, which we know is, these are delayed, but yeah, as of the last 13F, it's 45%.
Oh my gosh.
Yeah. And remember, he said he was late.
And he's always diversified. He guaranteed he's going to be trimming.
Yeah.
Like I can't see him not trimming. I know he doesn't like to sell, but 45%. So basically, you're buying Berk, you own Apple now.
When he bought Apple, what, like 2016, whatever, he was like, "Yeah, I should have bought this year. I should have bought this years ago." But
what about the
Icon
separation
sold.
yesterday, Joel, between Berk and Apple? Apple was down and Berk ripped higher despite owning 45% of it. I guess those banks were just that good, though.
You know what? You think about one thing with Warren too, and he did this in 20. But what if he wanted to dump that delta? Oh, that delta at $20. Just thinking, that thing is doubled. He'd be like the Berkshire would be at like 350,
I don't know.
360. That was in 20. But no, I mean he didn't like the position and he sold it. But just think about, that loss that he took on that and what his return is, and then what his return would be if he just, even if he just, held a little chunk, like, oh, maybe it's gonna come back.
All right, let's get Joe Saluzzi's thoughts on all of this. Joe is the founder of Themis Trading, co-founder. He's a partner there, and one of our favorites to bring on. So let's bring Joe on right now. Joe, Merry Christmas, Happy New Year.
Same to you guys. How are you?
Doing fantastic. What do you make of the first couple of days of 22 in terms of the market? And we were talking about just the spread between value and growth yesterday.
Yeah, no, that was interesting. Before I even comment there, Dennis was just talking about 200% returns and, hey, we can't do as well as last year. Back in the 90s, I don't know if you guys were around in 99, 2000. I was at a firm called Instinet, and we had like a 401k, whatever, and we were invested in these tech funds and whatever in the 401k, and they returned literally 200%, some of them. And there were guys on the desk complaining that they only got 125% in their fund. So, and we all know what happened the next couple of years, right? So you have to be careful. Everybody thinks they're geniuses. Oh, am I going to get 200% a year? Not going to happen, right? Not going to happen. And we've seen it first. We've learned and lived and loved it. Not loved it, hated it. But, you got to be measured.
Have you seen any change in your clients' like perception of this market with relation to value versus growth? Because I know like a year and a half ago, if you were talking a boring value stock, even in our chat or on our show, people don't even want to hear it. They want to hear what's the sexy story. It's all about what's going. We don't care about valuation we're buying, and and that's what was working. And now it's completely changed. The story doesn't matter at all. It's like, what's the PE on that thing? I mean, finally people are asking, what's the PE on the thing? Are you seeing any change in your own customers?
No, I think our clients are most, they're all institutional level. So they have very specific things that they're doing. So maybe someone's a small cap, somebody's more global, somebody's, particular sectors, and they have strict rules and they're doing, certain things. In fact, if stock gets too high, they'll trim it off because it's too big a percentage of that portfolio. They have to keep their risk measures in place. But, these guys are pros. They know exactly what they're doing. They know what their investors are looking for. I may go, let's just say you invested in a fund that was focused on short sell. Well, you're going there because you want that focus, and maybe you put in your portfolio something else. So, but you're going to particular funds because of what that fund offers as an expertise. And I think a lot of our clients are exactly that. They've got expertise in certain areas, and those funds are going to do what they expect. Now, then they may not beat the S&P 500, but will they beat their benchmark in that sector? And I think that's what everyone's looking at. But as opposed to yesterday, like you were saying, but that was a massive switch in value versus growth. To me, that felt more systematic, programmable, program trading style. It was, stocks were just moving, and it wasn't, right. It wasn't basic level supply and demand. And I was trading some stocks where I was buying, and these were, financials, and they were going up, and I'm like, okay, this is weird. Market's coming in, and everything was very strange yesterday. But then mid-afternoon, everything switched, right? So all of a sudden, we had that nice rally in the tech sector towards the back end. It felt to me more like some big player might have been coming in, putting in some sort of program style.
How different is the trading? And obviously, I kind of know the answer to the question, but how different is it from when you started? Go back to the 90s and think about how you were trading. And now it's like, even with the algorithmic trading, I mean, you're fighting these, especially if you're trading some mid-cap stock. I try to buy, I put an order out there, and obviously, you've got to use different things. But if you just show your hand, it's like, I throw a 50 bid and they take the 60 on you, and then they go 60 bid on you. It's like, oh, we got a hot one. Let's take this up on them. I mean, the algorithmic, what you want to call the predatory trading out there is something else.
Yeah, I call them parasites. They're a bunch of parasites. They add no value. They're leeches. They're looking for your flow to come off of and basically, clip a penny or two. So they've been there forever, right? Those are the HFT parasites, right? It's different than a market maker. It's different than, these parasites are proprietary traders. They've got, obviously the best systems, got co-location, they've got the speed, they do all that stuff, and they're looking for you, and they're trying to spot you. And the whole system, as we've talked about many times, is set up so that they can do that. The stock exchanges will sell them data feeds. They'll give them high-speed lines. They'll give them everything they possibly can to find your order. So, like you said, Dennis, suppose you're sitting in, the stock is a 10-cent spread, and you want to tighten it. You don't want to pay the offer, so you post a bid maybe 3 cents better than the higher bid. As soon as you do that, They're going to see that. Of course, everybody else will see that. But the difference is, on a data feed, you can see the person who entered it. You can see the time it entered. You can, not the person. You can see the order coming in, and they know that we call it blinking. So the high speed guys will constantly move their quotes back and forth, where you're sitting there and you're not blinking. So once you're sitting there, they can spot you and then either basically take advantage of you or at least learn some information.
It's a
That
real
hasn't
bet.
changed in 15 years, but that's
Yeah.
it's it's been there and it'll continue to be there.
I mean, it's a real bet, and this market is full of just floating liquidity, where it's market making different things, and all of a sudden they got a real bet. You'd be shocked if you took away all of the market making, you took away all of the floating liquidity, and you looked at what we had. We'd be left with like nothing out there. So then you just have a few real bids and offers, and when the real bid comes in, even if it's 100 shares, it's shocking. Even if you go bid for 100 shares on some mid-cap stocks, like, oh, we got a buyer. I mean, 30 years ago, nobody gave a crap about 100 shares, but 100 shares is like the
It's
market
it.
takes
It's
off
it.
on it now.
Yep. Well, and even if, say, you put that bet out there and then you cancel it, they're assuming that you're canceling to take the offer. So then
Yeah.
watch when not only when you place the bid, watch when you cancel the bid, watch the action that goes on there. But I think, SEC Chair Gensler mentioned this a couple of times last year in a few of his speeches. He wants more order to order interaction. In other words, that natural liquidity, which is being intercepted by market makers and others, they're never meeting. So how do you get orders to interact with other orders? That's difficult because of all the noise that's in between. Like you just mentioned, the real liquidity is a lot smaller. I think yesterday we traded 11.5 billion shares. I would bet real liquidity is maybe a third of that or something. It's
Yeah, I
a
think
lot
you're
of
right.
noise. And yeah, volume was there, but it's noise volume in our opinion. So what my job is during the day is to find natural liquidity and to make sure my clients don't get involved in that noise and to try to parse it out. So we use various tools. Obviously, we try to be different. My biggest word that we always use is we're random. We randomize our approach because once you become systematic, they can spot you. If you're doing the same thing over and over again, you're easily spotted. And a lot of the algorithms do that still. So we do random things. We've got direct connections to various exchanges. Obviously, IEX, we talked about them a lot. That's our favorite exchange. We get our most liquidity there. We get the biggest chunks there. I mean, seriously, the volume that it's a lot different, but the trick is to be patient. A lot of people don't want to be patient. They want those algos to work and continue to get in there. If you're patient enough, what we'll say is you cast out a net, right? Say you have a big fishing ship and you put your net out there. You're waiting for the fish to come to you. You don't have to always go get the fish. Wait for them to come to you. And once they get in the net, you'll be in a much better situation. Then you can dictate price. Now it's coming to you. You're controlling the stock better as opposed to, okay, I'm going to go chase these guys all day long. It doesn't work, especially when you're trying to accumulate size during the day.
Joe, I wanted to ask you about the IEX. How's the volume? Has it been picking up over there? I know it's Brad Kutsuyama started that a while ago. What would you say percentage of your business you're doing over there?
We are consistently, Joe, 30% of our volume
Wow.
every day. And
Wow.
that's on an exchange that is listing 2 to 3% market share. So how am I, and I'm not
You're a
sacrificing
big
client.
player. You're a big
What's
player
that?
over there on IEX.
We gotta
They
co-locate.
better send you a
Dennis.
fruit basket.
We gotta
They better send you a
co-locate.
fruit basket at
I'm
Christmas.
gonna buy
I
a
hope.
house right next to Joe.
But think about it, we're a small independent brokerage firm in New Jersey, and I can get that kind of volume on the exchange. What am I doing differently than everybody else? Well, like I mentioned before, I use it differently. I don't chase things around. I try to make them come to me. But the thing about IEX that's different, and we've talked about this before, is they don't supply an order by order data feed to the market. In other words, NASDAQ, NYSE, SIBO, they all supply data feeds which HFT guys can buy and then re-engineer what's in the book. They can figure out. But IEX doesn't do that. There's only aggregated order levels as to where they are. They can't find me. And if they can't see me, they can't take advantage of me. And that's really the trick. But you have to have clients who also understand that and say to you, okay, Joe, I know you know what you're doing. Here's my order. Take care of it. Do a good job. We'll measure it afterwards on various, statistics. They trust us. And really, the key to this business is I've been in the business since 90, well, God, I don't want to say it, but a long time. And the key has always been trust. If your clients trust you and you know what you're doing, you'll be okay. It's when some guys, what happens is they get the economics change, all of a sudden their margins start to compress and they do things they shouldn't be doing, like in any other business. And then guess what? You're not trustworthy anymore, in my opinion, and I wouldn't do business with you at that point.
Joe, I just wanted to ask you, we talk a lot about, institutional accumulation and distribution and I'm not asking about any one particular client, but just like on a whole, like if someone wants to take one of your medium sized or larger size institutions wants to, take a stake in, XYZ. I mean, they're giving you an order. I mean, does it can sometimes you get the order? Does it vary 1 or 2 days, 3 days, 4 days, or sometimes do you got something on your book for a couple weeks until you get it at the price that you want?
Yeah, it could. It depends on the client. Some are much more aggressive and will be
Okay.
like, listen, I want to max out my volume right away. Get it done. Get it. I have an arrival price. That's my benchmark. And if it's a thick stock, like, pick out one of the big caps, you can
Hmm.
pretty much trade that fairly easy. We don't trade many of those stocks that have, 10, 20 million shares a day. I'm trading stocks that are probably between 1 and 5 million shares a day, average daily volume.
Ooh.
And those are the ones, like you're saying, you have to work with them. And then
Yeah.
you're strategizing all day long with the client as well. And if you see something going on that maybe changes your strategies. Say, for instance, we're working, I've accumulated 25,000 shares, maybe I'm 20% of the volume. And all of a sudden I see a big print go off and I see somebody advertising it, 50,000 shares trades, and maybe it's LiquidNet or one of these crossing systems. You're talking to the client and you're saying, listen, something just happened. Maybe we need to change our approach here. But otherwise, you might be just doing percentage of volume, possibly with a lot of times we'll get this direction, be involved, but I would if I could, which means that if you see something, get it. Let's get it in here. But I don't want you pushing the stock also. So depending on the name, I've worked names for weeks. Yes, absolutely. And some days you'll take a day off from it and you'll give it a break and you'll see,
Yep.
hey, is that me pushing this stock? And a lot of times they will do that even during the day. Why is that stock moving? You're watching the sector, obviously, you're seeing if something else is going on. But it certainly depends on the client. And that's where it's still really important to keep that communication with your client, where I think a lot of Wall Street firms have lost this over the years. They've gone to algorithms, they've gone to junior traders, and pretty much everybody puts it in the box. They call it and they set it and forget it. But those are the ones that get spotted easily
Yeah,
because
for
the
sure.
HFT guys are out there waiting for that, and they're waiting to take advantage of it.
I just got one more for you, and then I'll let the Triple D take it away. Like, let's say another thing, like stock. Let's say you have 5 million to go in like XYZ, and they want to sell it at the point, right? They want to sell it at double O. Um, did do a lot of times do you let that thing, if there's other size there, do you let it get taken out and then, let it go up 20, 25 cents and then come in with your order and slam it? Or because you see that so many times, everyone takes the book out at the even number, they show their hand, then everybody's like, buy, 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 buy. Then it goes up 15, 20 cents, and then boom, it's locked down at the point again. Is that a familiar strategy?
It's funny. There's an old expression in the business where if a client gives you a limit order, they'll say it's a limit, not a target. Right? Okay. In other words,
That's
don't take
great.
it down there. Right? Don't take it to the point where let's see if we could do a little bit better on price too. So no, we're not going to go slam it down. We're going to try to work with it. We're going to feel that volume out. Right? A lot of times I'll just peg my order. Sometimes I'll let it float throughout. But I don't want to miss liquidity either. So it's a fine line there. Where I want to get a better price, but I also need to move stock. And especially if say you're working 25, but you've got another 200 behind. Well, you can't get too cute, right? We'll call
Okay.
each somebody will scream at me on the desk here, hey, cutesy bootsy, sell the stock, right? That's what we still get the old
That's
terms,
great. I love
right?
that.
Because you got to keep going. Because maybe you did great on the 25, but guess what? You got 200 to go, and now the price is slipping on you. So you can't be too careful. But it's a balancing act there, and it's the experience of the trader, knowing the markets. We've got guys here who have been 20, 25 years in the business. They know what they're doing. They can feel the stock. They communicate with the client, and you switch up your strategy as you're going, depending on what the market conditions are.
All right, Joe Saluzzi is a partner and co-founder of Themis Trading. Joe, always a pleasure, man. Thanks for coming
Way
up.
too long. How
All
did we
right.
not have him on
Yeah, it's
more
been a long
often?
time.
That
Spencer, I'm
handsome
blaming you for
mug,
that.
man. I
Yeah,
mean, we got it.
Exactly.
market structure world's been quiet. We usually talk about that. Maybe that's why.
I know we didn't even get into any market structure
Next
stuff. Bring
time.
him back
Next time.
next week. We got to get into market
Next week,
structure
Joe
talk.
Saluzzi.
Bring him
You got
back.
it, guys. Anytime. I love doing it.
Have a good
Thanks,
one,
Joe.
Joe.
Thank you.
All righty.
Great talking.
Let's do this. We got 10 minutes left. We'll drop your tickers in the chat. We'll do some ticker time. But we also need is a few more likes. We're at 234. We should be able to get to like 600.
I'm going to
easy
like the show right
peasy
now.
right
Going
now.
on there, clicking
Is this
like.
right? Do we not have any dislikes? Everyone likes
Don't
us.
talk about dislikes.
Everyone likes
Never
us.
mention.
That's
That's a dirty word.
unbelievable.
That's funny.
Dirty
That's not
word.
true. I know there's some people out there.
Oh,
Like
don't,
us.
Dan, don't get them going. Don't. We
There's a
don't
lot of
talk
people
about
out
that.
there that don't like
It's
you.
your
Dennis.
fault, Joel.
No, you can dislike us, but there's no counter, so we can't see. how
Oh,
many-
really?
Yeah,
Oh,
YouTube.
there's always a counter for that.
No,
Yeah.
YouTube got rid of it.
Seriously?
Yeah, because they don't want the incentive of people just brigading.
Then why
videos.
don't they just take it off there?
Well, that's crazy.
Well, I don't know. Yeah, ask them, man. Let's do some ticker time. What tickers jump out to me in the chat? Okay, this is one from yesterday that we talked about. Joel and I did at the close. Rekha asked about Alibaba. That had a very interesting day because on the one, it held up better than a lot of its peers, and then two, Munger. A report from Bloomberg came out that Charlie Munger had doubled his stake in the company.
I like to see where he started buying this puppy.
You got a nice double bottom, Joel. Look at this.
I know. We
115.82,
talked about it yesterday.
115.77. Me and Joel like those setups. You got a little pullback into it. You're risking $3. I kind of want to buy it, but it's so bloody hated. You just like every time I want to buy this, it's like, China ends up doing something and saying something else, and then they hammer all the Chinese stocks again. So, it keeps getting China'd. The valuation, I mean, we're moving a value market. It's been left in the dust, even though it's a value stock because nobody wants to, gamble on what's next for Alibaba from China. I kind of like it. I don't own it. I owned it for a long time. We know I sold out the rest of my position at 240 and then the rest of it at 148 after the earnings miss, and it was a good sale. I kind of want to rebuy it, but again, I just don't think I want a piece of China. So I don't know. As a trade, it sets up 115.82, 115.77. It sets up not bad. If you're trying it long here, I won't argue with you.
All right. Yeah. Again, same story. Holding the low.
Well, he'll argue with you, but he'll temper.
Well, I'll argue with everybody about it.
What about Generac? I got asked about this one yesterday.
That got the beat yesterday.
Right, hiding out in that too. It's not value. It was growth.
Someone asked me about
Sneaky
that
growth stock
in PreMarket Prep Plus, and I said, you know what? You need a national disaster. And you haven't had a national disaster. Look at that. That took out the low of the move. Holy mackerel. I hope they waited on that one. If you're looking for your next stopping point, boom, 314.01. That's your next monthly low coming in. And I bet you this. Can you look? Was this earnings day? Let's see. November 2nd. Was that when they had earnings? Because that was like, look at that earnings.
Yes,
look at that earnings reversal. Holy mackerel! 200 points.
PE 60 to PE 40. That's basically what happened. Nobody wants to own anything. It's actually quite simple what's been going on. You got a nosebleed PE above 50, they don't want to own it. You got a PE below 20, that's what they're liking. You got a PE below 10, they're buying those stocks. So, I mean, that's kind of what we're in here right now. GNRC, I believe, is trading around 40 times earnings now. So it's coming a bit, but it's still not cheap. If it came into like 200, all the value investors like myself say, okay, cheap enough now. There's still growth there. Generators aren't going away. I bought one for my new home, obviously. They're not cheap. I think I have $16,000 or $17,000.
Wow.
They're not cheap.
Hey, Dennis, make sure you get it tuned up every year. Don't get lazy on that.
I think they self-start, don't they? Like once a week, I think. I haven't hooked it up
still,
yet, but
I'm telling you, because we do that. I don't like forking out the couple hundred bones every year, but some other people in my family haven't done that yearly thing, and then when they needed it, they didn't have it. So
is yours a Generac? Or you got a knockoff?
Yeah, no, I think I have something better than the Generac.
There's nothing better than the Generac.
I bought my generator is probably a dozen years old, maybe even more. I got it when we had that. Remember when we had when the whole grid went out in like Pennsylvania and New York?
They went that blackout.
Oh, 2000
university.
2004, I remember.
Yeah, that's when I
got
it
was before that, wasn't it?
No,
it was that.
Yeah, I
was
remember
it 2004?
And it was July, I think. I remember.
Yeah,
and everyone went black for a day.
And I got a generator the next week.
You got a generator. It was intimidating.
I beat the rush.
Yeah.
You know what? It was 2004 because I was in the condo. Then I was still living in my condo.
Or 03.
And actually, my toilets wouldn't even work because that's powered in the condo. So I was like, you couldn't even use like, normally power goes out, you still use your toilet, but in that case you couldn't. So
yeah. All right. Yosh says it was
tough.
03.
I left the house for about 8 hours and the power came back
All right,
on.
I was off by a year apparently. Whatever.
2003. That was
03.
awesome.
Whatever. Okay. Let's keep going in the stocks here. Let's look at. There's a bunch of these. We can look at like Caterpillar or a Cummins, right? CMI.
Same thing. There's value stocks ripping.
Yeah.
Separate it. It's as simple as this right now in this market. You got value, low PE, and you got growth, high PE. And there's relationships there, but throw everything in the value bucket or everything in the growth bucket right now. It's all that matters right now. If we see a turn, and we might see a turn again, you got to be ready for those turns. So again, it's individual company fundamentals matter, but right now all that matters is your PE high or your PE low, because that's what they were buying and selling. It might turn, like Joe Saluzzi was even saying yesterday afternoon. You saw it turn a little bit. It got overbought, the value, and the growth got oversold. And it came in. Does that continue? Do we see a reversal today? Well, we don't know that, but you got to use, watch your ARC, watch your Berkshire, watch your indicators, so you can get on the right side of it. So because the turns are vicious, man, you got to be on the right side of those trades.
Look at this SE, Dennis. Holy mackerel! Down another 8 sticks.
Yeah, is that getting is that oversold massively? Is it done? I don't know. Tencent got out good though. Where was their price? They were geniuses over there.
202.
Yeah, they priced it. They got out 203, 204. So nice job, Tencent. They're traders over there. I think it's 189 now. Hey, I got out just in time too. That Bank America upgrade.
That upgrade, oh my god!
They top ticked it on that thing. They top ticked it open 230. So the trading in that. So I was long SE. I'll just tell you the story behind it. I went long SE, I believe, about the 28th or 29th. I bought it pretty good. I bought like 213. And it went up the next day. Remember, we had the big Thursday rally and all the growthy names went to 227. I was like, oh, yeah, we're setting up well now. You're like, okay, my trade's setting up well. And then, we get to January and we open up at 230. And then I watched my SE trade fall from 230 to 218. It lost 14 points in about 10 minutes.
Right
there. And I'm like, they're reversing this whole trade. They're going to pull the rug out from under it. But then they always give you some life. So it gave you the afternoon rip, roar, and rally. So that's when I lighten up. And I didn't get out at 225. Would have been nice. I think I got like 221 or something. But, I got out because I started selling. That's when I started selling some of those names. I said that on the show. The next morning, I was like, I had to lighten up because I don't like the tape. And then obviously, yesterday, if you had anything of those growthy names, you were getting stopped out left and right.
Hey,
so from
what about
new lows?
Sorry, go ahead, Joe.
Yeah, I just wanted to say, I know you probably weren't, you were just using the triple D, sensor feel on this, but I followed that trade through you. First of all, it opened up at 30.71 and went 50 cents higher, and then it came back down through the open. But that pop that you caught was right near. There was like a triple close at the 223 area. So I know you probably weren't drilling down on it, but when stocks have a big open like that and then they're way up and then they wash out, a lot of people start focusing on the mark. And I know you were just like using your senses just to get the hell out of it, but I did see the bounce, and this bounce right here, it did get back, it did get green a little bit, but then boom, that was it after that.
Pull up that GE chart. So
what happened to GE yesterday? Holy
value.
GE going to 100? I mean,
value.
It went to 100 yesterday.
Well, that reverse split.
What's the PE on GE? So first exercise. This is we're in a new world, folks. First exercise, bring up your trusty Benzinga Pro and look at what the PE of the stock is.
The forward PE is 24, which is actually right in line with the S&P 500.
So it's not expensive. So I don't know if you could call it a value stock, but it's not expensive. Do I want to own GE in my long-term portfolio? No, I just think the company just figures out how to do everything wrong. But right now, that kind of stock, it's like, oh, that's not expensive. We'll move into that. That's what the rotation was yesterday. I don't know if it continues. It was a little bit of capitulation. I can't tell you that value is going to continue to rip roar, Deere up 20 points. I mean, it was like a sell your peanuts while the circus is in town feel type of day. I know Deere is up here again, and maybe it does continue. But in some of these stocks, even Ford yesterday, obviously I'm long Ford, like, holy mackerel. I mean, then the last time Ford was up, it was up like 13% at one point in time. When is the last time Ford Motor Company went up 13%?
I mean, it's doubled
in a day.
It's doubled since September.
But it's not went up 13% any of those days last year, I'm going to gather. That's a huge move. Maybe it did. Maybe it went from 7 to 8, but wow, that's just an impressive move for Ford. I'm still long. I didn't sell any shares. I had a couple people tweeting out at me that they were lightening up. They were asking if I was lightening up.
Wait a minute.
What?
Did you rebuy or something? Or
I never sold my Ford.
you never sold your Ford?
No, I've said that multiple times.
why
Listen to the show. I say every time we talk about
Sorry,
Ford.
I thought you did.
No, I sold a piece back at 16, but I've kept the majority of the shares the whole time.
Okay.
So we bought it. So we all bought it together, like $7.50.
Oh,
We all thought it was going to be the EV story eventually. I like the F-150 Lightning, and it got up to a double, and I sold a piece, and then I've kept the rest of it. So I didn't even sell. Usually I sell half when it goes up to double, but I don't think I sold half. I might have sold half. But then I haven't sold any since. So
timing is hard, everyone. At the store. It's the bottom line here. On
trading is hard, period. I mean,
Yeah.
people in 2020 just think it's easy. I had so many people go, "Oh, this trading's so easy." I know why you've been doing this for 22 years. It's just the easiest way to make money. And I'm like, well, it's not going to be, just a buy stock and sell it a week later when it's up 50% type of market forever. So I'm like, enjoy while it lasts.
Yeah.
That market's long gone.
No, I remember that TikTok from 2 summers ago, and it was how do I make money? It's very simple. I buy stock, and when it stops going up, I sell it. Right? And yeah, that's awesome. That's great. Why can't we all?
That's as simple as it was.
It's so easy. It's so easy.
It was simple back then.
Yeah.
But we're at this point now. It's now you've got to use your trading strategies. You've got to understand different things. You got to understand rotations. You got to understand a lot of different things that are happening. So, I mean, it's not as simple as it once was.
It is not. All right, Dennis. We'll let you go. Have a good rest of your day. We'll catch you tomorrow. Everyone, I'm gonna hop as well. Don't forget to sign up for a free trial of Benzinga Pro. The link, I'm putting it up on the screen, pro.benzinga.com. Free 2-week trial for everyone. Check it out. It's what I use every day. Joel, Dennis, we all use it all the time. If it's not for you, hey, it's not for you. It's not for everyone. I don't know. Check it out, though. News, research, scanners, movers. We use Benzinga Pro a lot more during the live trading show, which is coming up next right here. Usually we start around 9:05. So the stream will end. We'll redirect to that stream, which will start in a couple of minutes. Myself, Mitch, Ryan, Zunaid, talking through the market, through the open, hanging out, talking trades, making trades, making and also losing money on the show. So that's coming up next. As always, hit the like button, please, and thank you. Remember that all the information on this show and all of our shows are meant to be used as informational purposes and not for investing or trading advice. Thanks to our guest, Joe Saluzzi. Thanks to all of you in our chat. And I'll catch you guys over on live trading starting in 2 minutes. Have a good one.